Wonderful.
All right, so good afternoon, good evening, no matter where it is you're tuning in from. This is the second in a series of events on Meet VCs. So meeting the people who power venture capital and learning more about them. So I am your host, Brian Antolin, the program manager at Line Run. And we are so very happy to have two incredible leaders in venture capital to share a little bit more about who they are and what they do every day. So we have Mehran and Ananian, investor on the venture team at SeedInvest. And we have Victoria Mehran, associate at Expert Dojo. So really looking forward to this conversation. But before we hit up the questions, let's talk a little bit about Line Run and who we are in case this is your first time. Line Run is an experiential career and industry education platform for tomorrow's workforce. We empower our community of leaders to connect, innovate, and grow through media, events, and programs such as today's session. We invite you to check out our website, www.linerun.co, to learn more about our podcasts, classes, and career accelerator programs. So, Line Run. With that, we're going to jump in and learn a little bit more about each of our two guests tonight. And we will start a little bit more about who you are and your journey into venture. We'll go with Mehran first.
Hi, Brian. Thanks for having me. I am Mehran Ananian, and like Brian said, I am currently working at SeedInvest. We are a fund and an investment platform, allowing retail and accredited investors to invest in startups that we have diligenced as a broker-dealer and are taking allocations of their offerings so that normal people can invest in startups as an asset class. I've been doing this for about 15 months. Prior to that, I was getting my MBA at Yale School of Management. And then prior to that, I spent 6 years in investment banking. It sounds like a more traditional path, but there were lots of loops and hurdles along the way. And if you had asked me 10 years ago, I never would have expected to be here. So would be happy to field any questions about what decision points I came to in my career and kind of where I am now and what I'm trying to do to help founders. I am particularly focused on female founders and first generation, second generation immigrants, but industry agnostic, mostly investing at the seed stage. So happy to be here.
Thank you so much, Mehran. And also, before we head over to Victoria, I want to give a shout out to some of our frequent flyers here. We have David Hall, Fernando Montejo from New York City EDC joining us. We have, let's see, going down the list, Turner, so glad that you can be here. Rashid, really great that you can be here as well. Again, chat is open, ready for you. If you have a question, feel free to put it in the chat. Victoria, heard a little bit about Mehran's story. Would also love to hear more about your journey into venture as well.
Thank you, Brian, for having me. So as you mentioned, I am an associate at Expert Dojo. We are the largest international accelerator fund based in Southern California, and we invest in pre-seed and seed stage startups around the globe. And prior to that, I've been a financial analyst for the past 12 years. I'm Iranian, originally born and raised, and did my education in London. Got the H-1 visa, moved to the US, and worked in various industries of semiconductor industry, sensor and technology, automotive, asset management, and private equity. And since 2018, I started to learn more about startups and help them to build a financial model of them and forecasting and advising, and now investing in them. Like Mehran, I'm very much into female empowerment and women empowerment. So I'm trying to allocate my time to help female entrepreneurs. and also immigrants as myself, that I became a citizen in 2018. And I am very much trying to support the entrepreneurs that they've been through the same journey as mine. And I'm more than happy to continue the conversation.
That's wonderful. And Victoria, thank you so much. And definitely double click on female empowerment and equality and trying to level equal playing and creating a more level and equal playing field for female founders and everyone who is starting businesses is a real top priority for us at Line Run and definitely for your organizations as well. So again, really happy to have you both. Now that we learn a little bit more about both of you, we'd also love to talk more about your work, specifically what really gets both of you going in terms of working in venture and working with founders and startups every day. And Megan, we'll start with you. If you had to point out one thing that excites you most as an investor today and moving forward in this really altered pandemic, post-pandemic world, what would it be?
Yeah, I'd say Victoria and I are probably going to have a lot of overlap here. I didn't realize you were also, my grandparents immigrated to this country, but you're a first generation, which is amazing. So that's a lot of what I'm most excited about, is I would just say opportunity. 10 years ago, I felt like VC was very opaque. It wasn't even an option if I wanted to get into it, unless I, went to Ivy League and knew all the people at the country club kind of thing. And now there's talk of diversity riders where people are adding into their term sheets that you have to have a certain percentage of female or underrepresented investors on your cap table, which is incredible. There's the new changes to the accredited investor definition, allowing more normal people besides just the top 1% of the wealthy to become accredited investors based on taking a test to determine financial sophistication, or work experience, other things, other levers that you can pull. And then just the conversations that are being had right now. Whereas if you are an underrepresented founder, there are certain firms that are only investing in underrepresented founders that you can go to and ask for help, and like more peer coaching and more professional groups just for those groups of people than I think there ever have been before. And so just access to investing is a huge change that I'm most excited about.
As Megan said, I totally agree with you about the opportunities and also about the timing as well, because I've been to another, kind of a downturn in economy as well. And I see it as an opportunity of growing faster. And there's exciting, sectors that we see that they're growing, that it makes us very excited. And as you mentioned, this revolution that happened during the pandemic about investment in minorities and women, it really is huge change in the venture capital world, which I support very much. And I think that you and I have a lot to talk about after this conversation. So in regards to that, but yeah, that's a very exciting time to see a new businesses and innovative ideas to come come to the surface technically.
As both of you have mentioned, this is a real prime time for more access, more diversity, and also greater awareness of trying to be more intentional with how you reach out to different founders from different communities and how they reach out to you. Aside from getting warm leads and in your network and folks in just your general community, how has the pandemic really changed the way that people really try to reach out to you for advice or to get meetings? What has that process been like for our founders who are listening in right now? Is it more of, since everything's kind of decentralized, you have more time for just open calls, or do you actively get involved with other communities you weren't involved in before? How is this working, Victoria?
So we've been an accelerator. So for us, it was a double job because we saw this pandemic as an opportunity for us, and we doubled our investment. So and we kind of received more outreach, more. So for me, however, one thing that is the most important part of my job is that helping entrepreneurs, whether it's the pandemic or not, whoever reach out, I try to take some time to, at least even if I don't invest in them, direct them and coach them to the right direction. Because startup walls, I always say that they are like a developing countries. You never know that the person you meet today, what's going to change in their life in 2 months time. So and building a relationship even with the people that you don't believe that they are right timing for you to invest in them, it's always good to have a relationship. And that's why I try my best to during this pandemic, whoever reached out to me, allocate some time for it.
Yeah, I totally agree. I will say, with everything being virtual, it's been fine for us because we've always done virtual meet and greets and video calls. So there was really no reason for us to meet in person before. We were used to doing this online investing. I'd say I get a lot of emails and a lot of outreach via Twitter and LinkedIn, etc. I just ran an email analysis, and I'm receiving about 150 emails a day, and it's just really hard. Like, it kills me that in the beginning I was like, I have to get to inbox zero. I have to be able to respond to all of these. So I'd say 2 things that I would advise. One, like, try to use some kind of system or tool to follow up in a week. If I haven't responded, just like, hey, Megan, did you miss this? Or like, just following up, because sometimes it just happens. And then B, give me all the information I need in that first email or LinkedIn message or Twitter message. So like, just the broader, like, hey, do you have time to jump on a call? Is like, like, I'm not really, I'm dying at work constantly. Like, all these like junior VCs, we are the people that are like really hustling and working the really long hours. And so being like, hey, I'm looking for this, this, and this, like, this is who I am. This is how much traction I have. And I can be like, hey, that's not my realm, but I can introduce you to someone. So just like, make it as easy as possible for me to respond back to you with whatever you're looking for.
Definitely a great piece of advice, especially for just general networking purposes. Do the other person's homework for them. And if you can answer and check all the boxes, it makes an even greater chance that they will answer you quicker, or even with the answer that you actually need. And I love that. And it's something that we try to preach to the students we work with at Line Run, and also something that I learned, I picked up a long time ago as well. It always goes back to the details, right? We had a really great comment from Nicholas in the audience right now about how this definition of accredited investors has really evolved, and how it's gotten really concurring with both of you, Megan and Victoria, on it's getting a little bit easier through the pandemic to reach out to investors directly, since there's no need to schedule coffee calls or go to an office or anything. And Megan, he also brings up about his startup looking at more crowdfunding platforms. Has the pandemic really accelerated this type of onboarding or growth at SeedInvest? Have you guys seen that?
Yeah, it's been a little bit crazy. Because we've been doing online investing for a while, we didn't have, I think everybody in March probably had a little bit of pause, but then we immediately picked back up, and we've had like 300% growth year over year, whereas normal VC led, we do a lot of like following on to VC led rounds, and having people that were kind of drop the ball with their term sheets. We just picked up their allocations of their rounds and filled it from our investor network. So we ended up closing over $33 million in investment volume just in Q2, which was wild. That's like as much as we did in a whole year previously, just because it was like, hey, VCs are pressing pause. We have a way to get you access to capital so you can survive this pandemic. So I think you definitely have to do your research and make sure that you're working with a vetted platform, making sure all the deal terms are okay. I think some crowdfunding platforms tend to be like a DIY listing platform, and you can put your company at like $100 million valuation and put crazy terms in there, but that's going to lead you down the road to some issues when you're trying to get follow-on capital from more professional investors. But I think as long as it's, same deal terms as VCs are investing on, it's a great way to get access to capital and really, like I was saying, democratize access to founders who may not have the crazy network. It will really help get you the exposure that you need.
I absolutely agree, actually, Megan. We are running one of our cohorts startups. They just raised around 1.5 million through the vFunder, and we are very happy about it. And I think that it's a great way of access to capital in this pandemic. Is a crowdfunding and more kind of open sources.
Yes, and this decentralized approach for sure is gaining a lot of momentum, and even before the pandemic, it was really gaining steam. And I don't know if I mentioned this to you when we were talking earlier, Megan, but I was part of a focus group with Ryan Felt right before the whole regulations thing came about, and he talked to a group at NYU, and I work with NYU, and yeah, it was really interesting to hear everything, every single thing he mentioned in that little discussion came true. It's just the timeline was a little bit off, but how people are accessing capital, the fact that more people want to get involved but just doesn't meet that specific bar, but the fact that it's really the regulations that have really made it much easier to get involved. It is really powering and empowering people on both sides. It's really interesting.
40% of seed stage startups in the UK have done a crowdfunding raise, which is just crazy. And they started it, the regulations passed probably 7 years before they started here. So I feel like we're shifting in that direction where it's like normalized to have a crowdfunding portion of your overall raise. I think everyone should have strategic investors, especially if you're a first-time founder and you need some guidance on how to get to the next place. There's a lot of value in that because crowdfunding is traditionally pretty passive, but we see a lot of second and third time founders that are like, hey, we've done this. We already have the strategic. We're really just looking for the capital to get us to our Series A.
Definitely. And Victoria, you mentioned that just a few minutes ago that crowdfunding, you're seeing that it really is part of the equation, but do you feel that it's also a potential threat to your company's business model as more of a full-on shop that works on the accelerator and then also on the investment end?
I absolutely agree with Megan. Strategic part of it is very, very important. And accelerator truly is not the money. It brings that infrastructure of thinking about how I scale my company, which strategy I can go and make X amount of a revenue and make the X to the 2X and 3X, and in which period of time I should do it. So it's actually, I think that crowdfunding, it would be a great complement to us because we bring the certain check sizes and also strategic, and crowdfunding can bring a next stage, which is a bigger size check, and we complement with one another. However, what we see in the venture capital world, opposite of, my opinion about the crowdfunding, is still in America is not very pleasant, despite the fact that they made it very easy on the cap table to be presented very clean and neat. However, still we see some hesitation around the crowdfunding, and the companies for the next stage that they go after the crowdfunding to the VCs, we see a lot of difficulty that they face in terms of raising money from VCs. But I don't know what, Megan, do you think, what you see around the venture capital world and crowdfunding?
Yeah, I think what we do is a little bit unique because we are a broker dealer. And so we are always a complement to VC. We never run crowdfunding rounds that are you're only raising from crowdfunded investors. Absolutely. So you are investing alongside Female Founders Fund, Bessemer, Union Square Ventures, all of those people as a complement to those rounds, not a competition. Like you couldn't raise money from anywhere else, so you have to raise via this. So we have over $1 billion in follow-on capital for the 200 companies we fundraise for. So I think in those cases, when it's complementary, and like I said, you're doing it on the proper deal terms, you didn't mess up your cap table or issue common stock or crazy safes with no valuation caps. I think as long as you did it properly the first time, then we don't see any issues. But I've definitely seen what you're talking about, where someone will come to me and I'm like, I don't think we can fix this.
It's great to hear that you guys really go in on partnerships and really approach it from that perspective, because there's a lot of misconception going around, especially if you're new to this, whereas people think that you just have to do one or the other, and they get really caught up in that. And to hear that and it's really validated on both sides, I think is really, really powerful and very impactful and helpful for the founders who are listening to this, where no, it's not one or the other. It's what comes first, when, and what makes the most sense to you. Going into our comments again, we have a great question from Fernando, who he's asking, is it helpful for founders who may be facing the funding gap early on to, especially those from underrepresented communities, to pursue the crowdfunding route first, as opposed to trying to, get into an accelerator, gain momentum, and then get the funding, and or is it better to try to gain traction before even getting those first investment dollars? So Victoria, what do you think?
I personally think that as long as they have a right advisor on board, they are able to do that. With the advisor who is respectable in the industry, and they can get the better vision about it, there is not a problem. However, before running to, angel investors or per se family and friends, going to crowdfunding, I think that maybe it's not the best route, because I personally think that you need to knock every doors first around you, and then go and knock the doors a bit further down the road. So I think that per se crowdfunding is not the very kind of a closed door to you. So can be knocked later. So you always have an option for it. So it depends whether, your advisors around you, they think that this is the best route for you. In certain industries as well, it depends on the industry and sector you are in. So it's kind of combination of a kind of 3-4 factors that they need to come together to make this decision whether it should be first or second.
Yeah, I think you hit on the exact point I was going to hit on, with having some other validation signals, like having a strong advisory team. So one of the things I hate the most about this role is having to tell founders a lot of the time, go out and raise friends and family and come back to us. Because I know personally, I would have never been able to raise $1 million from friends and family to start my first venture. But can you replace that with some external signals like, hey, I got the head of, Coca-Cola or Match.com or whatever it is in your industry to make an angel investment or to sit on my advisory board. So I have this validation that this is something that's needed in the community, and then at least try to raise like an angel round through that strategic investor. We typically are not investing in pre-seed companies that have not raised funding before. So we're usually not the first investors on your cap table. So you have other strategics in there, but we're happy to lead and price around after that. And we're happy to help connect you with other angels. But I think you do always need to go through that angel pathway. It doesn't have to be institutional VC and the big name brands, but finding individuals and doing that hustle to try to get some of those people on your cap table or at least on your advisory board is pretty important.
It's absolutely, I agree, Megan, with you. I think that one of the things that you touched, and I want to kind of elaborate on it, exactly that despite the fact that, for instance, we are accelerator, however, we are not the first investor either. So you need, as an institutional investor, you're very cautious of who we invest in. So it's better that you bring certain attraction in terms of either investment or the product proof of concept that at least this product has been prototyped and has been in pilot with XYZ, and then that's a good time that as an institutional investor I come to bring something bigger vision, bigger strategy to the table.
I love what you both just brought up, where it really goes back to what we were talking about a few minutes ago, doing your homework first. And to address Megan's point about it is really hard, especially if you don't have that immediate network around you to raise that very first friends and family round. And one thing that I always advise the student founders that I work with is do one of those pitch or business competitions where even if you're a little bit over where they're expecting, do it anyway, because yeah, it's great to win, but even if you don't win, the people who are at those sitting in those demo days and the pitch days, 30 to 40% of them are angels. And it's all about the networking. So you're doing your due diligence by going through the process of those grants, programs, or those competitions, and by doing all the homework up front now and being advised, and not even going through a formal program where there's strings attached, having the access and the networking opportunity at the end is so valuable and can actually lead to getting a check from one of the people in the audience. And that's actually the reason why they go there, because it's a unpretentious environment. And in most cases, and I could speak to the competition that the New York Public Library does at the Science and Industry Business Library. Half of the audience are angels. I can say that. I've been to 3 of them. Half of them are angels. So they just go there to see how they can help. And that's really where all these conversations start from, and how even if you're not at a point where you're ready to ask an investor for formal money, asking them questions about the process and going in that way and building a relationship with them so that 18 months later, when you are ready, they know who you are, it is a real benefit to you later on. So we have another question from Kevin. Moving on from here, I think we'll go with Megan first. How do you pick the industries you decide to invest in? Or is that kind of preordained to you that your bosses tell you what you have to invest in? How does that work?
Yeah, I'd say a little bit of both. So I am looking to invest on the side, and I am only really investing in fintech and edtech because it's what I know. It's what I've spent my life experience in. If you came to me with a biotech deal, even at SeedInvest, I would send it to somebody else on the team, or otherwise send it out to somebody else I know in the network. And I think that's what's so important. That I think the next question was like, do your diligence on making sure you're reaching out to the right investors. If you're talking to somebody, if you are an enterprise marketplace, then there are specific funds that are doing just that. It's pretty hard I wish there was just like a database of like, here's Lair Hippo is consumer and all those things besides just the name brand funds. But do a little bit of diligence, figure out what's in their portfolio. Most VC funds have portfolios up or it's up on Crunchbase. So make sure you're reaching out to the right people. But I'd say even I'm industry agnostic and as at SeedInvest, but even if I don't know the right person, there's somebody on my team who does, that I can connect you with somebody in that industry. But for me personally, I'm only investing in things that I care about and I'm passionate about, and I can have an intelligent conversation with you about, not the things like, medical device sales, which I know nothing about.
That's very interesting. You, Megan, said that. I personally, because we are industry agnostic, I look into everything. And one thing that I personally makes me excited about the new deals is certain industries that they have a bigger impact to the community. You touched base on fintech and edtech, which I love. And since the start of the pandemic, I noticed that agri-tech is another industry, medtech. These are the industries that they have a bigger impact into the society in general. And I try to look into those type of deals that have more impact. Being said, we are an international, accelerator. We are industry agnostic, so we look into everything we can, and then in the deeper due diligence, we go deeper. We bring experts who can validate kind of whether this technology works or not. But coming from fintech myself as well, I personally like fintech a lot as well. I think that it has a huge impact. And as you mentioned, I think that every entrepreneur needs to know what is the target aim of the VCs that they're gonna invest in them. So they need to do their due diligence very well around the VC world, that, even if I don't have a reach out to them, these are the lists that, I prepared, and I know that this is the right angel investors and VCs for me. So first I approach certain angel investors and then VCs. So preparing that, Excel sheet or chit chat type of Excel sheet is very, very important. And follow up. If I am in the beginning, I reach out to the VC out of lack of understanding, I should keep in touch with the VCs for later on. And in this Excel sheet, it's like a project management. You need to say that I met them, they rejected, follow up in 6 months, because the same VC, they forget about you. However, when you progress, it's a good time for you to reach out. It's not that because one time they said no to you, it's gonna be a ultimate no. So always you can change the no to yes with 6 months, 7 months of work and get back that traction.
Definitely. And it really drills down what we've been saying the past few minutes about doing your homework and making sure you're prepared. And there's only so much that your pitch deck will tell about you and about your story, and you have to make sure that, number one, is it actually going to the right person for this, and if not, what other value are you looking for from that person, and really flows down from there. And great comment from Nicholas here about what VCs wish that startup founders would know or be prepared about, the stuff that Victoria was just talking about. He's mentioning he wishes startup founders to understand the sourcing that's applicable to them. Have they screened the market? And again, go into what both of you said, who would be the best VCs to work with in that space. So regarding Nicholas's 2 points about sourcing and screening the market, how important for your investment, your lines of work, how important is that to you both? So Megan, we'll start with you.
How important is sourcing?
Yeah, so understanding your market and being able to answer, even if you don't exactly know the revenue model part, but understanding the market and where you fit in.
Yeah. So, I mean, we are industry agnostic. So I wish that I was in a place where I was just constantly reading. I think there are some funds that are focused on a certain thing. So I'm constantly reading. I know who the big players are. Building market maps. But mainly for us, I'm constantly, like you were saying, going to pitch days, going to accelerators, pulling Crunchbase lists, like looking through Twitter, trying to find the best companies because we are so industry agnostic that you could completely surprise me and reach out and I've never even heard of this industry before. And then I'm having to research about it for the first time. So I'd say I'm not as focused on like knowing everything about every industry and what the big movements are, and just kind of being able to see the waves of things that start to come through. Like, it was all 3D printing in 2018, and then it's all this, and then now it's all the future of work and the future of learning. Sorry, I don't know if I answered your question.
It gives great context, I think, to just how you approach things. I think that's what he was looking for. And Victoria, just doubling down on what you were saying earlier on that whole process, and also the fact that you are also more on just looking at being a generalist and looking at different industries. How do you approach this?
So, as Megan said, we are always, looking to what's going on in the industry. It's part of our job to know who raised the biggest, check size, who invested in that, and again, we are not very focused. However, what is coming up in the future, and attending different incubator, accelerator around the world, you see the technologies that is coming up and the interest around, folks in the industry that they talk as well. You see what type of industries that now it's more popular and people they invest more in. So generally speaking, we are trying to have a bigger picture as a VC and know what's going on around each sectors. And some sectors, for instance, pandemic, help them to grow dramatically, and some sectors has been affected in a very negative way. So it's always good to know what is the wave of market is in order to position yourself for the investment.
Definitely. And we've been talking all day about founders and reaching out and the process that they go through to do the due diligence, and how you both as investors really try to advocate for them no matter whether or not you can invest in them or not. If you had to, just looking back on your experience to this point, look at one specific pitch or one specific company that really stood out and made you really excited and really wanted to invest, and even if you weren't able to for whatever reason, can you describe what that experience or what elements made you excited about that company and why it was so impactful for you, so that our audience of founders can have a better understanding of how they should really approach it? I think we'll start with Victoria.
Okay. So the best pitch so far that I received, it's included everything that in a way that you explain it to 14 years old boy per se, because investors in general, they're very impatient, and you need to grab their attention in less than 3 seconds. You know that in less than 3 seconds, you want to continue listening, or you want to be that 14 years old boy that, you are distracted. So that's a minute. It's very, very important how you present yourself. And I always said that, the pitching is like a storytelling. So it shouldn't be very long, because people, they get bored. It shouldn't be very short, but it should be enough in order to grab the attention of the audience and investor, that they want to ask more questions and learn more about it. So it's like bring the taste of a food to them and make them a bit hungry in order to ask more for it. And that's kind of putting it in perspective, that how you need to pitch. So they touch every element of a business in a way that they explain it to 14-year-old boy, that they can understand it and makes them excited about.
Yeah, I think that's a really good point. I'm actually interested to hear what other people's perspective is on this, because I personally, I would say it's more of the logistics and the conversation of the raise than like any particular raise. Few things being, send me the pitch deck a day in advance. There's all this stuff about like, keep your pitch deck private. I don't really understand it. Nobody's sharing pitch decks wildly. If you don't give me that context to at least understand, then we're not going to have a very productive conversation, because I'm maybe it's just me, but I'm a very visual. I need to see it. I need to understand it. I need to digest it. And so when you're like, hey, I sent you that pitch deck an hour ago, I probably haven't read it. I didn't have time to. So send it a day in advance, but then still come to the conversation and give me exactly like Victoria said, that 30-second, 1-minute overview. You are Zoom for construction or whatever it is, and tell me where you are, like what traction points you have and what you're asking for, what you need. So another big pet peeve of mine is walking through a pitch deck page by page, like 20 slides. I don't really need that. I really just want like an overview, and then we can start to have conversations about where you are, and just be really upfront about where you are in this thing. Like sometimes I see people give me this whole big pitch and you're still at the idea phase. Like you haven't built anything yet. And, or like there's this huge elephant in the room that you're not acknowledging it. We're going to get there in diligence. So it's best to just I had an amazing pitch with a founder last week that was like, hey, our biggest thing is like CapEx requirements. Our burn rate is pretty high right now, and we're struggling to get it down because customer acquisition cost is really high. And we need to get to this, this, and this before we can bring it down. And it's going to take us 8 months. And then also our CTO is part-time because he can't be full-time right now. And I was like, wow, you just gave me like half the red flags I would have figured out, but I would have wasted several days to get there. And looking through your financial model, you're like, hey, if you don't like it, that's fine. Can you refer me to someone else who might be able to talk to me about it? But just being very upfront and like, don't hide the elephant in the room. Just give it to me straight so I can tell you whether we can still work together.
Give it to you straight. That is probably the best advice any investor can ever give to a founder. Tell me everything that would come up in some type of TMZ thing, and tell me now before we start, so that I can figure out what's wrong with you and how I can help you. I think that is great. That is really, really amazing. If only people would listen to that advice. That's the only thing. It's like, if only more people would listen. I think going from great advice on how founders should really open and be honest about where they are, to move into just VCs in general who are interested in this in the space, people who are interested in becoming VCs. We have a question from Fernando, who's working on more VC and startup diversity initiatives for the tech community in New York. His question is, what big wins or changes could make the most impact for diverse funders? So we'll start with funders and then we'll go to founders, to get more people from underrepresented communities involved in venture capital. From what you have seen, your experience, what do you think can be done to get new blood, fresh blood into venture? Megan, we'll start with you.
I think what you're doing, first of all, is super helpful because, again, like I said in the beginning, I didn't know this was a path that I could possibly take, so I didn't even pursue it. But being like, hey, here are the steps that you can take, and doing a day in the life of this is what it looks like, this is how I got here, is super helpful. So just more promotion of people who have done it, and how they got there, and how they got their first seed capital, especially if they're a funder. Are there like economic development corp grants that you can give to first time funders that have the professional experience to help them kick it off? But I think just more general awareness. It's so hard to, like, you see the same top tech names pitching at all the like New York City EDC things, and they're all promoted by the same people. How do we get those diverse founders and those diverse funders? Like, can we create All Raise is a great program that just started, this Visionary Voices program, where it's having underrepresented and female founders and funders be eligible for speaking panel events. So if you're looking for someone, don't just like go to the same Layer Hippos, Union Square Ventures of the world. You can go to Visionary Voices from All Raise and pick some other people that you haven't heard of yet, but could give an interesting perspective. So just elevating those voices so that more people are aware of who the other founders and funders and opportunities are. I'd say that's number one. And then the second thing, it's always driven me crazy that there's not a directory of some kind of all the micro VCs, all the angels, like anyone who is registered as an LLC and is making investments in the last 24 months. How do you pull those people up, and how do you even know they exist so you can cold outreach or try and get a warm intro to them? So having some kind of like New York City EDC of like every micro VC registered would be incredible.
I absolutely agree with you. And I think that one of the things that is very, very important, congratulations, Fernando, for what you are doing. Creating a community is very, very important because you learn from one another. I always say that these type of communities, they are like a university. You share experiences, what you've been through, and the next person per se not really repeating the same mistake, or if you got the result out of a route that you took, the other person can learn about it and custom make it that it's more adjustable by what the route that he or she is going, and take that route. Connecting with the funders and founders, these two community always, it was a kind of a gap, and now we see a lot of communities that they're trying to connect these two communities together, because founders need the funders, and funders, they need to invest. So they kind of a correlation that it's linear, so they need to have this relationship. So my biggest advice is that this type of communities needs to be active, and you need as a startup and as a founder to be part of it and contribute, because one part of it is that it's a great win-win situation, and the other part is that these communities, they're giving back to the society, and which is very, very important. What you touched about All Raise, for instance, they created such an ecosystem that now everybody, they talk about it, and they changed the whole system that we used to work in, and created something new.
It's really amazing what they've been able to do in such a short period of time. They're less than 3 years old, right? It's like 2 and change. And that's really the impact of community, as you both mentioned. It's that network effect, and once you get to a point where you can get the network effect, it really takes off from there and takes a life of its own. Going back, we're talking about just general advice for founders and also for people who want to be a VC. But to wrap up, we're getting close to the top of the hour, but if we were to wrap up with each of you just sharing 1 or 2 pieces of advice that you would tell yourself if you were to start this whole journey as a venture capitalist again, knowing what you know now, what would you tell yourself to prepare for what you're doing now, to do better? Megan, we'll start with you.
Oh, that's a tough question. I would say network more earlier. So don't be afraid to either A, go to all these demo days, ask people for coffee, you know, talk to founders about the deal terms they're asking for and the traction they have. And so having more awareness of what it even meant to invest in the seed stage versus Series A versus Series B. It took me, my first 3 months in this job were insane. So I was like, oh, convertible notes versus safes versus preferred equity versus common. There are lots of things that I academically knew a little bit about, but I didn't know conversationally what the pros and cons were and why founders were choosing certain routes. And like really becoming helpful in some things, like people being like, hey, I work in this industry. What do you know about the market? Like information is pretty readily available, doing a little bit of research and giving it back to them so that they remember me as this helpful person. So doing the work before you feel like you're ready, publishing on Medium. I mean, I used to spend like Saturdays researching something and then that was it. It was gone. Like it's in my head now, but like, I don't know, publish something. It's not going to be amazing and get republished to a million different things, but like put something on paper, at least like put your thoughts out there. And so doing a lot of the work that a VC does, which is like the research and the writing, figuring out who is in certain industries, figuring out like what deal terms are most prevalent at any time, checking out some of the trends, following VCs on Twitter, just understanding the conversation beyond just the academic. I wish that I had started doing that earlier.
I absolutely agree, Megan. One of the best point that you mentioned is networking. I touch base on that because I lived around like 3 countries so far, and 4 actually, Germany as well. And I think that this is the most beautiful advice that somebody can give to people, no matter which industry. I don't think that it's only venture capital related. Maybe it's kind of percentage wise is, but reality is that I remember, my corporate finance, professor at university, once he mentioned that you can be a best quant, but you always gonna be in the quant and do on a back office. But if you are a good quant and you know how to build a relationship, you're gonna be an MD soon. So that's the best advice that he gave me. And I feel that if I had, more time, and if I would have gone back to the past, I would have, took this advice more seriously to build a relationship, because in the world that we are living, the information is asset, but it becomes like basic, because everybody they read the newsletters and everybody they listen. It become part of the trend of everybody to be diversified and wanted to learn more, and information is available to everybody. But networking is something that nobody valued that, but the impact of it in your future as a founder, as a funder, as an engineer is very, very important. That what it becomes like a normal, kind of a standard of a 0 that you should know. Everybody expects you, but who is most important things that you need to spend more time on it, and building it and nourishing it is very important. And it takes time. It's not that you observe it and it's gone and you learn it. It's something that you every day you need to spend time on it to keep and maintain those relationships that you started and initiated.
Yeah. Just one more thing that I'll touch on because you just brought it up again. I met with a kid last week, 18 years old, who was like, hey, can I, pick your brain for a little while and figure out if this is the right track for me. And then after the call, he sent me 2 different companies that were fundraising at his college that he thought were interesting and based on our conversation might be a good fit for me, and was like, happy to make an introduction to you if you're interested. Otherwise, like, best of luck. I understand what you're investing in. I'll reach back out if I ever see anything in that realm. And he's like, I put you down in my contact book. And I was like, what? Why didn't I do that? That's incredible. Like, he just provided value for me, did my job for me. And now I'm going to remember who he is, and he'll reach back out if he finds anything else that's within my investment thesis. Like, that is the go-getter mentality, that he took some of my time, but in return, he helped do my job for me. And I was like, that's incredible. You should get hired.
It is so amazing what networking can do and how underrated and undervalued it is. And I'll leave everyone with this point. LinkedIn is wonderful. Twitter is a great way to get to people really fast, in my opinion. And I've backed this up over the past 4 months just from doing this and doing these podcasts and doing these webinars. The most important and impactful social networking platform, at least for me right now, is Eventbrite, because you get to meet people from all around the world and have a reference point to them, because they're either speaking at an event or you'll be able to listen to them at some point, or you can say in your intro, I saw you spoke at this event. It is the absolute most valuable thing. It's all about building relationships and taking that a step further and connecting the dots. With that, Megan, Victoria, this was an incredible conversation, and I can't thank you both enough for sharing your knowledge, sharing an hour with us. This was really incredible. So thank you both so much. And thank you to our really incredible audience that asked really great questions. This is a really, really wonderful experience. And I hope for those of you watching that you've been able to get a lot of value and also answer a lot of your questions in the process. So thank you all so much. Before we let everyone go, really quickly, 10 seconds, we have a wonderful event coming up October 20th on the future of London tech and startups. So we are following up our event from last week with Silicon Valley and going to London and exploring their ecosystem. So if that's of any interest, linerun.co/events. With that, thank you both so much, Megan, Victoria, really incredible. Thank you to our audience for watching and listening, and we'll see you everybody next time.
Thank you so much, Brian, for having us.
Definitely. All right.